Whoa, 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 whoa.
Folks, I need to talk to you. I need to talk to you about all the craziness that is going down this week. I hope you're watching it in time, but this is everything you should know for the upcoming trading week, the second week of September, starting today, I guess Monday, September 9th. Like I said, I hope you're watching this in time because I have absolutely no idea if the market's about to rip to kingdom come or absolutely plummet, but I can promise you that we're going to have some serious moves. So once again, this is everything that you should put on your calendar and everything you should be paying attention to. Obviously, if you haven't already, don't forget to like, don't forget to subscribe. With that being said, let's rock. To kick things off, today was good, but not amazingly good. Dow closes nearly 500 points higher and rebound from Wall Street's worst week of 2024. For those of you who are a little bit more visual learners, here's how today went. We kind of violently went nowhere, a little bit of a drift to the upside, but yes, the S&P 500 up 1.12%, the Q's up 1.3%, and even the small cap sector in the green. The bulls won out, but is it anything to run home to mom about? Not yet. At least. Let's just put it that way. Before I really get going with this, I need you to know about the seasonality. Remember, September is an awkward month. There's a little bit of neutrality, then bullishness, then bearishness. Historically, over the past 2 to 3 decades worth of S&P 500 data, the bears do generally win out in September, but it's a tough fight. So just because we're kicking off the second week, I want to let you know roughly where we're at. This time around, we also have some specialty things going down, such as a presidential debate. Tuesday, September 10th at 9 p.m., we're going to be hearing the debate between former President Donald Trump and the current Vice President Kamala Harris. If you want, you can watch it with the Goonie community. I will be streaming it wherever you're watching this video, so feel free to tune in. And you know what? If you're watching this right now, let me know in a comment below, who do you think's going to win? I'm curious where the audience is at, not necessarily who you want to win. I'm curious who you think's going to win. Also, on that note, just this is according to Polymarket, I want to let you know where things stand, and apparently it's pretty close. Trump is currently leading 52% to Harris's 46%, and obviously we have some of these key battleground states such as Pennsylvania, North Carolina, Georgia, Arizona, Nevada. So just paying attention there. Obviously, if you're in any of these states, Michigan, Wisconsin, highly recommend that you make sure you're registered to vote. I don't care who you vote for. I just ask that you do vote. And ideally, it'd be pretty nice if you're also an informed voter. So maybe research a little bit more than just checking out the headlines. Now, speaking specifically about the market, before the market opens this Wednesday, September 11th, we're getting the CPI report, the Consumer Price Index report. Why is this important? Because it's the last CPI report before the FOMC makes their decision on the next Fed fund rate change. Basically, we're getting a cut. We just don't know how much. That comes next Wednesday, September 18th. As of now, the line in the sand year over year is 2.6%. So obviously watch it for coming in a little hot, a little bit cool. Pay attention to that. Fast forward another day to Thursday, the way we have our FOMC meeting, the Fed here in the US, well, this Thursday in Europe, the ECB, the European Central Bank, is going to be making their interest rate decision, most likely going to get a 25 bips cut. But also at that time, we're going to get the PPI report here in the US, the Producer Price Index, obviously another important measure of inflation. So this week, obviously, we have the debate going down, CPI report, PPI report, and then we find out what Europe is doing with their Fed fund rate. So now that you know the major things that might swing the market to the upside or to the downside, let's actually look at the current structure, the current price action. Obviously, not so long ago, circa mid-July, we hit an all-time high in the S&P 500. Since then, we puked. Then we rallied, putting kind of a double top, a slightly lower high. And now the question here is what is the SPY going to do? Are we putting in a higher low and we're going to bounce off of it and do a cup and handle? Or are we actually just legitimately going to break down from this lower high, get this gap fill, and then visit where we were at the start of August? If you ask me, the chances are 50-50. And I know that might not make sense. That's not the most exciting thing to say in a video, but it's honest. Really. I mean, the next bar, the next movement generally is just a 50-50 shot. The way to make money is to protect your risk and make sure that you have an outsized reward. It's much more of a strategic way to handle the market rather than predicting it accurately. The people who make money, especially when you're day trading or just swing trading, it's more of people who react to it properly. So the way I see things right now, we had a neutral day. We had what's referred to as an inside day. The high and the low were within the daily candle bar of the previous day, as in the high was lower and the low was higher. We had an inside day, so just wait for it to break. Either wait for today, or better yet, Friday's high to be broken and we push up, or wait for today, or better yet, Friday's low to be broken and we push down. In the latter scenario, if we were to break down, I would very much be targeting 535.73, this downside gap fill from Monday, August 12th. I would definitely be paying attention to that. Now, this might not look that exciting on the daily chart, but if you're a day trader, there's a good chance you had to deal with this craziness. As I like to say in the Discord all the time, we violently went nowhere. We pumped up, we dumped down, we pumped up again, we dumped down. Now, I do want to let you know, you might have been thinking, I got whipsawed by this. If you're a person, I'm sorry if you're watching this and you're like, dude, I got whipsawed every single one. It was just a little bit too crazy. What could I have been paying attention to avoid this type of insanity? And I have the answer right here. First of all, shout out to Spot Gamma, but take a look at this. I mean, honestly, look at what happened. The white line is the price line of the S&P 500. We pumped, we dumped, we pumped, we dumped, and then we pumped right at the end. The other lines are what happened with the options market. As you can see, midday, even though the SPY pumped, at first the options did too. And really, you could see that they were a leading indicator, as in they pumped before price. But if you notice here, you can see starting around 11:30, options stopped going up. Even though price kept going and going and going, options were kind of sideways from 11:30 all the way up until about 1:15, and then they started to dump, which is exactly how I personally knew to not get trapped in this pump. I knew something a little weird was coming because options started to pump first. Once again, just to show you the time frame of it all, they started to pump around about 11:15, and then 10, 20 minutes later, that's when the price in the actual market started to pump. But the reason I knew not to chase this, and in reality, the amount it pumped, I'm going to even willfully admit, even surprised me because it just kept going and going and going. But I knew not to get trapped in this. I knew not to chase it because options simply did not agree. And in fact, when I saw a little bit of weakness right here, I took advantage of that opportunity, and that's exactly how I made my money today. And instead of just being another talking head on the internet, let me prove it to you. Right here, my daily G-Gen report. You can get this for 100% free, mattkohrs@locals.com. It's in the description of the video. First of all, at 10:30, the Piper signal fired off a neutral to bearish signal, bearish 3 out of 5 confidence on the SPY and the Qs, call credit spread, call credit spread. Yes, they both fully hit. For every $158 in your account, you could have returned 42. But just to give you proof of how I traded this, boom, right here. I sold a call credit spread at 1:30, bought it back at just past 2. So for about a half hour worth of work, as you can see right here, made $85 per one, and I had 15. So that's just over $1,200. $1,200, 75 before fees, so about $1,200 after fees. But just to kind of show you how that all aligns, I was waiting. I said, oh man, this options market, it's just not in sync with the actual price action. So as soon as I saw this weakness right here, about 115, right here, 130, I took advantage of it. And as soon as most of the spread ended up decaying, I locked in my money and moved on with my life. And if you want to do that type of stuff in real time, of course, join Locals. That's how you can get connected to the Goonie Trading Discord. Moving forward, just because of the market, I know right now we're in an awkward holding pattern. You're probably saying, okay, I need to wait for the breakout and breakdown. That's what you do. As an active trader, your job is to react to the market. But the other things you should be paying attention to are some of the earnings. Just so you know, Oracle reporting as I'm filming this, GameStop after the market closes tomorrow, and Adobe later on this week. But I would say there's two other bells of the ball, if you will. Number one is Apple. Basically, they had another Apple event. You might find this surprising, but about 20 events later, 20 iPhones later, we're getting the same iPhone. It's just slightly better in terms of its camera, memory, and technological capability, but nothing that wow, I guess if you ask me. Obviously, the internet already dunking on it. Unless the new Apple Watch can track microplastics in our balls, we're not interested. Everyone's just kind of poking fun at Apple of how it always does the exact same thing, just slight improvements, and then they have no issue charging us over $1,000 for it. In more of a real sense, there were some announcements here. Apple confirms Apple Intelligence will launch in October. That's their version of AI and AI capabilities. And if you want to look at the new phones, like I said, they kind of look like the same thing, just slight improvements, nothing jaw-dropping. The only jaw-dropping thing is that, yes, it in fact will cost you $1,200. Now, with that, Apple stock itself saved itself from disaster today, almost broke down from the 50 EMA. Intraday, like the overall market, looked kind of crazy, down, then up, then down, then up. So nice pump into the end of the day. Will it last? I have absolutely no idea. I just know it saved itself from disaster today. Now, is this a big deal? Without a doubt, because if the biggest stock in the world, and when I say the biggest, I mean that very literally, Apple right here, 3.3 trillion, the number one traded stock. If that were to crater, of course it would take the SPY down with it. Now, on the other hand, if this company continues to go up and up and up, yeah, it will also take the overall market with it. So obviously important to pay special attention to Apple, Microsoft, and Nvidia, but I really want to see how the market's going to digest what Apple had to say today. I want to see how it has to really react tomorrow. The other one was Palantir. If you're invested in Palantir, if you're bullish on Palantir, congratulations to you because it rocked today. Palantir soars 13% on software vendors' inclusion into the S&P 500. So when a company gets put into the S&P 500, it's not just bullish because people are like, oh, that sounds good. It legitimately prompts more buying. There are many, many people out there who run their own version of every single index. So when the index is updated, as in when an individual equity gets put into it, the people mimicking that index are forced to buy. Myself, I'm a big fan of the company. I don't actively trade it, but I love it as an investment. I love the company, the space it's in, and the leadership team, and for good reason. I mean, look at the stock. At the start of this year, it was trading around $16, currently trading at $34. Let me double check its year-to-date performance. Currently sitting up a crazy 104%. And the last week alone, it is up 11%. So if you managed to catch that, a massive congratulations to you. The final thing before I let you all go, don't forget to get on the newsletter, mattkohrs.locals.com. I break down the previous week, let you know about everything for the upcoming week, including all the major macroeconomic events, all the earnings. I highlight the ones I think you're really going to care about, such as Oracle. And then I give you the seasonality for each individual trading day. So for tomorrow, Tuesday, September 10th, it's kind of neutral. It was bearish, recently bounced back, but these are the hypothetical results over the past 25 years. Wednesday, a little bit more bullish. Thursday, a little bit more bearish. And then Friday, a little bit more neutral. So it's kind of a crapshoot of a week. And that's exactly why you should be paying attention to things such as the CPI report, the Eurozone decision, the PPI report, and everything else in between. Right now, we're in a holding pattern, but as soon as it breaks, once again, you shouldn't be married to the bullish or bearish bias. Just let the price action tell you. If you break out, take long positions, respect the risk. If we break down, take bearish positions and respect the risk. Don't try to predict. You should be reacting with good risk to reward tolerance. And obviously, don't forget to pay attention to the presidential debate tomorrow, because right there, we're going to see huge swings in the betting markets or who they thought win, who they think is going to win the presidency, which will have a big impact on the economy, which will have a big impact on the stock market. So obviously, it's all intertwined. I appreciate your time. I'll catch you tomorrow. Have a good one.